Is Indianapolis a good market for real estate investors? Is the Indianapolis market a good market for remote real estate investors? How do I start beginning to, or should I begin buying properties in Indianapolis if I'm an out-of-state real estate investor? Those are the top questions that came in, and we're going to answer those now. I'm Oz Mayo. This is Joe Crump, a supermodel. Both of us are both retired supermodels. My good friend Joe Crump and I are going to answer these questions here. So you want to go first or should I?
I
Should I go?
like it. Go first.
Okay. So here we've got a bunch of links here, guys. Check this out. Is Indianapolis a real good market for real estate investors? Just type in Indianapolis real estate market. You're going to find, check this out. Kiplinger, Indianapolis Star. Indiana is listed as one of the top cities for emerging markets in the Wall Street Journal, Realtor.com, Emerging House Markets Index. Here's one. Besides one in Indiana, besides the ones in Indiana, the list features 17 other cities. And Indiana had 4 cities that were in the top emerging housing index for the Wall Street Journal, Realtor.com. The Indianapolis Star has another article here you guys can check out. Kiplinger put this in the top emerging markets as well. Emerging markets mean that they're growing, obviously, but also in the top current markets. For the index, the Wall Street Journal, Realtor.com, they reviewed over 300 metropolitan areas. The list, quote, highlights housing markets that offer shoppers a low cost of living, including for homes, thriving local economies that are attractive but not too crowded. They took into consideration population size, unemployment rate, the medium homeless, and the price, the medium homeless price, and or the home price that falls in the middle of the market. There's also another one here from another market here, or another article here. No Rata real estate, no radar, no radar real estate. This is they do a lot of. I think it's no Rata, no radar. It's when you say it together. But they do a lot of investing. They do a lot of turnkey investing. They looked at all their markets that they look at. They're one of the biggest turnkey investors representing the Midwest. They looked at Indianapolis as one of the hottest markets as a dynamic, thriving real estate landscape, attracting both home buyers and investors alike. The capital city it's the 16th most populous city, Indianapolis. And then another article here from Zillow. It's one of Zillow's top markets, the hottest markets of 2020 and from 2023 to 2024. There's a bunch of other stuff here. Smart assets. There's another article here. These are all, if you do any research on hot markets in America, Indianapolis always hits the top. And I'm just putting these articles here. You can see them. Finance, Yahoo Finance had another article here on Jeff Bezos' fund arrived. They say allow anyone to become a landlord in just 10 minutes. You only need $100. That's a good hook, by the way. Although it's BS for you. You shouldn't pay attention to that, but it's a good hook. It sounds really good, right? And in the market here, Jeff Bezos creates this real estate fund, right? Known for his highly ethical behavior. But he creates this real estate fund, and he creates this. And there's also Elon Musk fund and several other billionaires getting involved with these funds. These funds start buying single-family residential houses, which tells you something. By the way, they're not going for commercial. Commercial's essentially dead, especially with COVID. But they're going for single-family residential houses, and they're specifically going for houses in the Midwest. And within the Midwest, they're specifically going for Indianapolis, which is one of the reasons why we are competing with these people. We've got Wall Street, we've got Silicon Valley next door, we've got all these hedge funds, we've got all these monsters and minions that we're having to slay every day because we're competing with them all. So when people talk to you about turnkey investing, which is kind of your larger question, about if you want to invest in real estate, you have to be working with a team that you know is going to outcompete them, that's going to outdo them. When you look at these people, look at their marketing, look at their skill, and ask yourself, are these guys going to be able to go out there and cut the throats of these, heavyweight guys like Jeff Bezos that are coming in? Because these guys have got endless money, endless pockets, and they're coming in investing. But check that out, guys. So who loves Indiana real estate? Kiplinger, Realtor.com, Wall Street Journal, Smart Asset, Zillow, Census Bureau, statistics that was up there earlier, Jeff Bezos, Wall Street hedge fund, Silicon Valley. All these people and are coming out and they're investing in real estate. But the big secret about all that, here's the thing: all this stuff that we just covered, all this stuff about the hot market, none of that stuff really matters. And Joe knows this. None of it really. All that is people, usually on the coast, they're looking at people, flyover country and saying, "Oh, that looks like a good moneymaker." None of it means anything. All that matters is because if those people are all wrong, are they going to pay your rent? Are they going to tell you, oh, you made a bad choice because of what I said? Well, I'll take care of that. That's not going to happen. None of that really matters. It all goes back. This data goes back for years, by the way. It's not that these are hot markets right now. You don't want to do trendy stuff. All this market goes back. This data goes back for years. We're going to talk about that in a second. Don't follow trendy stuff. It's, especially in real estate, it's not a good idea. It's much more important to look at the last 20, 30, 50 years and study that data. So if we look at that, this is much more important. Indiana has had about 9 to 10% appreciation over the last 30 to 50 years, half a century. If you look at it overall, it's pretty much, that's what you want to look at it, an overall trend line that goes up. Now,
I
some of
mean,
you that are
doubling in value in every decade.
Yeah. So if you want to look at, like, if you're on a coast and you hear that, you're thinking, oh, that's terrible. Yeah, for you it is, because you could buy a house for 1 million, wait 6 months, sell it for 1.5 in California. That's nothing. You don't even need to fix up the house. That is definitely not going to happen in Indiana. That's especially the Midwest market, that we don't have that kind of appreciation. But to make up for that, property values double about every 10 years, like Joe just said. If you want to know to do that, by the way, the rule is 72. Take 72 as a numerator and just divide it by whatever rate. So if you take 72 divided by 10, it's actually quicker than 10 years. It's about 7.2 years. But if you take the 7.2, we're still looking at about 8 to 10 years. Roughly, when you're looking within that 8 to 10, we're going to go by 10 or 15 years is going to be our number that we're going to use, but it's about 9 to 10% over the last 30 to 50 years. So it should double in value and double in rent every 10 to 15 years. Rents double about every 10 to 15 years, like I just said. And any dips in price, this is the important thing. If anything we're saying is wrong in the last 50 years, all you had to do in Indianapolis is wait. That's not the case in other markets. If you're in other markets that are outside of the Midwest or outside of Indianapolis specifically, waiting could actually cost you a lot more problems. And it's
Look
like
at
if
look
you
what
own,
happened in 2008 when we had the crash.
yeah,
We lost what, 30% value on the properties,
yeah,
and it took what, 2, 3, 4 years before we were back to where we were, and now we've
right,
doubled. Our values have doubled since then.
yeah.
And so,
Yeah,
so even figuring in crashes like that, and there was another one in '91, which is the one that I got stuck in back in California. I didn't get stuck in 2008 because I saw it coming because of 1991 when I did get stuck. And even counting in over these last 10 years, over the last 20, 30 years that I've been in the business, we're seeing that 100% increase every decade without fail,
yeah,
without fail. And it's been like that for 50 years here. And
yeah.
and that's only because I don't have data going back before 50 years.
Right. Yeah. No. Yeah. And if you look at even in 2008, because we were both in the market at that time. By the way, Oz Mayo, Joe Crump, why should you trust us? Why should you listen to us? We've been invested in real estate, specifically Indiana, Midwest real estate, collectively for over 50 years. Our team have been doing this for over 100 years. That doesn't mean anything as we talk about, though. All that means something is the outcomes we have. We have experience. We also have education. We have provided more education for investors and business builders than any other group on the planet, as far as if you want to learn how to make money in real estate, build generational wealth, buy and sell companies and real estate, zero down, and build your portfolio up, build any passive income. We have more education on that than anybody else. But more important than all that is the outcomes we have for our people. We help people go from 0 to 10, 20, 30, 40, 50 grand a month, 100 grand a month and beyond. No one has more outcomes and testimonials than we do, success stories. That's why you should listen to us. We have other videos on real life deals. So if you see anything we're talking about, like, oh, that doesn't work. That's not, those aren't real deals. That's not how, those deals aren't in the real world. We have hundreds of videos we've made on real life deals, and you can apply to become an investor. This program is our Get Rich Slow program. You have $200,000 cash, turn it into $100,000 a year passive income forever. And the bad news is it's going to take 10 to 15 years. You're going to make no money. You want to reinvest every penny during that 10 to 15 years of nurturing time. The good news is you don't have to leave your house. You don't have to do anything. That's what this is about. If you want to apply to become an investor, click the link below. So coming back to what we were saying, it's exactly what you were talking about 10 to 50. This is all about buying and hold. If you wait, you'll win. Even in 2008, I did not change anything with our buying. I bought more, if not, I bought more. It's like the that old saying, when others are fearful, when others are greedy, and greedy when others are fearful. So even then, if you just waited it out, you'd be fine. The reason why people run into problems is because they don't have the financial, or they, because they're alone or whatever, they have a time crunch. If you don't get in a time crunch in
Yeah.
Indiana real estate, you can win, as long as
It's the biggest mistake that investors make, and I've seen it
yeah,
happen to even to my students. And they'll buy a property, it'll be cash flowing, it'll be looking to them like, it's not making much money. I'm making
perfect.
$100 a month or whatever on this thing. This isn't great. And in fact, it's making them far more than that.
Right.
They're looking at 20, 30, 40, 45% on the returns on these properties when you figure in all the benefits of buying these properties. And then they turn around and sell the properties because they think it's just a drag on them. It's creating stress for them in their lives.
Yeah.
And in fact, what they need to do is find someone competent that will manage that property for them and take care of it for them, so that they don't have to think about it. All they have to do is look at the check that comes in, once a month.
Yeah. Yeah. It comes down to the training and the team you're working with. Because if you're working with a good team, they're going to educate you on that and tell you that, you know what, this is stupid. Don't ever sell. And this is why, here are the 10 reasons why you're going to make a lot more money. And if you don't have the right team, you get, so often it doesn't matter how smart you are. If you don't know, you don't know. If you don't, just no one's born knowing about real estate, knowing about passive income. And that is the whole goal here, is to create passive income. Whether or not Indianapolis is a good market, the question here, the real question here is Indianapolis a good market for you? Maybe it is, maybe it's not. If you're a passive investor focused on long term, yes, it can be. You want to get the right team. You want to get properly educated on what passive income is. It's equity times production. We have several other classes where we talk about this. And you want to get connected to the right team that understands this, understands what passive income is, and they can show those success that they've had with other people. So coming back to what you were just saying, the reason people sell is because they get run in these time crunches, but also they don't have good advice. They don't have good guidance. If you buy correctly and you have the right team and you know the bigger picture that you're trying to create, for example, 100K a year passive income forever, and you want to be making, 5, 10, 15, 20, 30 grand a month, 50 grand a month, or whatever, we can reverse engineer any passive income we want once we understand the math. And you need to have a team that understands that and that has produced that outcome for others in the past. If you
I,
do that, you're
I've
going
seen
to be
I've seen other
invincible
investors where they'll have their property will double in value, and they'll say, well, I need to sell this and cash out of it.
before the market crashes. Yeah.
Yeah, before market's going to crash on me. And we
Yeah.
know the market does fluctuate and it will go up and down. So that's true. But if you held on to that property, it'll continue to go up in value over time, even if there's a dip in it at some point. And so it makes and by the way, as soon as you sell that property, you have to pay capital gains on the profit if it's not in a Roth IRA or some other protected source. So it doesn't make sense to sell it. What you would do if you really need that cash out, let's say you want to make another investment in something else, you pull that cash out through a refinance. Pull the cash out, there's no tax on that. Plus, you continue to have the asset that the tenant continues to pay the mortgage on it, and it goes up in value. Plus, you make cash flow.
Yeah. Yeah. The three kinds of income: active income, which is the ugliest kind, then investment or portfolio income or investment income, which is what Joe's talking about. You sell a property. And those two incomes is what really funds all the bad stuff that you don't want our country doing. Whenever people complain, that's what all the money's coming from, those two things: active income and investment income. Because passive income basically has no taxes. I know that's an accountant would freak out hearing me say that, but if you have passive income, you can structure in a way where you basically pay nothing, because the people who write the tax code are the richest people. And the richest people all make money through passive income. You think they're going to write tax code that doesn't benefit them? It obviously benefits them. So the more passive, as long as you have passive income and you don't sell that asset, don't sell the money tree, use that income to plant other money trees, you should be fine. And again, the question here about, is Indianapolis a good real estate market? We're going beyond that answer, but the main thing is, it can be a good market if you, any place can be a good market if you have the right plan, the right expectations, the right resources, but you also have to have the right team. If you're looking at creating passive income, like I said, our program, 200K cash, turn into 100K a year passive income. Indianapolis is a perfect market for that. We'll talk more about the 1% houses and the market in other videos. But that is what you want to look at as far as if you're invested in, especially from out of state. We help out of state investors, particularly with these, but you don't have to be out of state.
Yeah.
But you do want to understand why Indianapolis, why these numbers are important to create passive income.
And having a team that you trust is important, but having a team with a plan is even more
Yeah,
important than that.
outcomes. Yeah,
They got to have a plan. They got to know what they're doing and what they're trying to accomplish. They have to know where it's going.
yeah.
Uh, Too many people get in the plane and they don't know where their destination is.
Yeah. And if you're on the wrong plane, facing the right direction or running in the right direction doesn't matter. It's not going to help. And that's what a lot of people are doing. And the thing, when we talk about the math, the 9 to 10% and the 1% houses, which we talk about our safe house algorithm, we have a video down below. If you want to click to become an investor, you can watch the video. All that math supports this whole process of passive income. It's the best of both. The Goldilocks. It's not too expensive. You're not buying like in Carmel or in Ritzy, like Beverly Hills areas. You're not buying in the slums. You're not going to buy in places where you need a SWAT team to collect rent every month. You're not going to buy meth labs. You're going to buy the sweet spot of houses, and that's Indianapolis is perfect for, because you can get 1% safe houses, and those are perfect for creating long-term, forever income, passive income that's generational. So,
And and
yeah,
also look at it's not just about the money. It's also about what it is you're doing for the world, what you're putting out there into the world, and you're
Your
creating
mission.
housing. You're creating housing for people, and the way we're doing it, we're actually creating a path to home ownership for the 75% of the country that doesn't qualify for a bank mortgage, and making it possible for families to have homes. And one of I think it was Jim Drale that once called it the crying quotient. The amount of the percentage of people that cry at the
At
end of
closing.
the transaction at closing, and thank you for giving them the opportunity to have a home for their family. It's a powerful service, and when you start seeing the good that you can do at the same time you can make this long-term generational wealth for your own family. It's a business that you want to get into.
Yes. Yes, and that is Indianapolis specifically is a great market when you're buying. It's also good for other people to buy as well, and we help other people buy. So it's not just a good for investment, but good for home ownership as well. And it's affordable too. It's not one of these crazy markets. People, when we set people up, they can actually buy and they can afford. We help them build their credit. We do all kinds of. Your team's got to be connected to. Is Indianapolis a good market? If you look up Indianapolis investing or Indianapolis turnkey investing or out of state investing, you're not going to see a lot of great news. You're going to see a lot of scams, a lot of bad news, and you're not going to see any of these turnkey companies that have any success stories. And this is why, because they're not going in with this thinking, and they're not going in with the right approach. So Indianapolis, yes, it is a great market. A lot of people will tell you that, but what do those people really know? And if they're wrong, it doesn't mean anything. You have to have the right plan. You got to know the math, and you want to build your right team. So, does that answer our question? Is that good, Joe?
I love
Anything
it.
to add? Okay, so if you want to apply to become an investor, like I said, click below. Thank you so much, guys. We'll see you next time.